This is Tesla, and before we start analyzing the charts, let's clean up the charts a bit. This is the recent highs at 300, which is a round hole psychological number. These boxes were just showing blocks of where price stalled, and they either moved higher or lower. This was the uptrend line where price was respecting, showing just massive momentum in Tesla from the, say, May lows to the mid-July highs before price broke down. So we'll take this off. This yellow line, if we zoom out to the monthly chart, this was a line in which it served as resistance, then support, support, support. And if you go back down to the weekly chart, I thought it was going to serve as support again after price broke higher and closed above the line. So I'm going to take that off the charts. Now, Tesla made some recent news this week. As you know, Tesla has cut its prices on its cars 6 times just this year to date. The first cut came in January when Tesla reduced its prices on all of its models by roughly 20%. Then the company then cut prices again in February, March, April, May. The Model 3, which is Tesla's most popular model, now starts at about $42,000, making it one of the most affordable EV vehicles on the market. Now, some analysts believe that the company is trying to boost demand for its cars due to increasing competition from other EV makers. Others believe that Tesla is trying to clear out inventory of its older models before introducing new ones. It is also possible that Tesla is simply trying to be more competitive in a global market and trying to push the envelope in EV adoption. Now, the news that they made this past week was they cut prices again. This makes the 7th time, and we still have 4 months left in the year. Let's look at this video before we continue with the analysis.
We're talking Tesla. The share's getting hammered today, but still up about 100% so far in 2023. Kev, give me your take here. They're changing the Model 3 sedan, making it a little sleeker, but then they cut the price in their Model S and Model X in the U.S. and China. Is this, due to the fact that maybe a demand issue, or do you think this is more of, getting ahead of some of the OEMs in this space, the EV makers, Ford, GM, that are going to come out with a plethora of models? Is this strategy, or is it maybe based on what's going on in demand?
Well, that's the tricky part to figure out. I have a counter trend take on this. I think that Elon Musk is still putting ultimate pressure on the U.S. car manufacturers, especially with them about to pay big dollars in labor disputes and new contracts. I don't know. We don't know for sure. We won't know till the numbers come out if demand is dropping. But think about this. From a China perspective, they should, with all the stimulus going on, you would think there would be some hope for the future, for China. And China's numbers overall aren't coming in as bad as expected. It's actually pretty firm here. And they have a laundry list of things that they're doing to stimulate their economy. Now, I think that's actually good for Tesla. The new revamped Model 3 sounds kind of interesting. A new sleeker model, more aerodynamic, longer battery life. a couple of stiffer body, improved suspension, improved rider quality. So they're making improvements and tweaks to the Model 3. But the price drops in the Model S and X, they're massive. And now he's got them both below that threshold for the $7,500 tax break. I think he's putting maximum pressure on U.S. automakers to try to compete with him. It is, like I said, I might be dead wrong on this opinion, but I think he is competing hard to be the overall winner, keeps putting pressure on the U.S. car markets, Tom. That's my take. Stock's not believing that. Stock's down 4.5%, Tom.
Yeah, Alex, margins have been shrinking, but they still are double or triple what Ford and GM's margins are at this point. So he does have, the capacity to continue to lower prices, put some pressure on a lot of the auto manufacturers that are going to be releasing more models. Your take here on Tesla? I mean, it's still had a good run. It's still up 100% so far this year. And you got an example trade for us too.
Yeah, I don't disagree with Kevin's position as to maybe why they make these decisions. I mean, they also have a different model of how they actually sell the car. You go to Tesla directly. You don't have this dealership model as an intermediary where the dealers are buying those cars and then trying to sell them for higher. You're not going to be able to move prices around as quickly when you have that marketplace as opposed to directly at Tesla. What has Tesla's plan been all along? It was initially, and he wrote it down on the piece of paper, I think he tweeted it not that, a couple years ago, it was make an expensive car to make a less expensive car to make a more affordable car. That's the plan. The plan is to make Tesla affordable. The plan is to be more efficient. But it's also an implicit admission that, people aren't buying these cars at this price right now at the rate that we want them to. So they're going to be flexible with prices. We saw prices going higher at points. I mean, you didn't think earlier this year, and now we've seen kind of the opposite. And so they're going to be malleable to the demand environment that they're in, where the rest of the marketplace is sort of stuck to the the MSRP price, and then add on the couple thousand because you never quite get that sticker price. But I guess my point is that Tesla's not necessarily trying to be Ford or GM. They're trying to be Tesla. Yeah. And if that model puts pressure on GM and Ford, great. But in the end, this is a growth-minded company, despite the fact that it's a lot more mature than it used to be. It makes a lot of money now. Yeah. Still has a pretty crazy valuation for basically a car company or a manufacturing company. But you can see just simply looking at how analysts approach this name that it's more mature. What have we always said about Tesla? It's super polarizing. There's super bulls and there's super bears. Well, now 40% of analysts on the street have a hold rating. Yeah. I didn't see that 2-3 years ago. So I think that's a credit to what they've done at Tesla. But if you're cutting prices, unless you can say we're going to sell enough more cars, which they're not, to offset that loss in margin, it's going to impact the stock price in the interim. So I think it makes a ton of sense, the reaction we're seeing. But I think that this is a move from more of a neutral stance than a position of weakness. I mean, this is still the premier car company in the world, and it's still the premier growth company in the world of that space. That being said, self-inflicted wounds are going to lead to stock prices going down, and cutting your own prices is a self-inflicted wound.
All right, so I'm just going to zoom out real quick. We have what was a head and shoulder, and this dashed white line is $300 level, which has served as resistance multiple times in the past. All right, we're going to go down to the weekly chart, and what we can see is a breakdown in price. You can say you had some sellers here at say at the 263 level, in which price is reacting to that zone now, or did react to that zone this past week. Now this is a level, so I'm going to, you'll see what I mean when we get to the daily chart, because I want to distinguish it between this band, which serves as support, resistance, now support. All right, I'm going to take this off the chart. Now let's scroll down to the daily chart. And you can see how that band that I just drew, support, support, resistance, support. Now this is the level that I just turned from white to blue. I like to draw my daily zones in blue. And you can see you had a rallying price, a couple of basing candles in the rally out, taking out the pivot highs to the left. But it wasn't on huge volume. So that's why I did not designate it as an A setup level of interest. Now, we can see that price has been range bound for the last 4 weeks. You can see how you have a rally in price, a couple of basing candles, and a drop. So rally, base, drop. You can see a rally, base, rally. However, I don't anticipate this level holding for the simple fact that price did not clear this zone here, which means that the sellers are in control at the moment. Now you can see that Friday we did close a little above the lows. You can see price reacting to this zone. If I put my, there we go, I like to draw my zones like that. So it did react, but it was also the end of the day. So you probably had some people who sold were just taking their profits. So that meant they had to buy. So there's no really trade setups at the moment. Tesla has been sideways for a while. You could potentially put on some iron condors to get some credit. Depends on the premium, which depends on the volatility. Tesla is one of the most active stocks on Wall Street, so you should get a decent amount of premium if you were to put on some iron condors. But at the moment, I don't see any real setups. If we get a collapse in price, I love this $200 level to go long. You also have the 200-day moving average in that zone right now. So the next several weeks should be interesting. Again, Tesla's going to move with the broader markets, probably in particular the NASDAQ 100. So thanks for watching. Subscribe, please. Like the video.